Good morning, my dear friends, bankers, students. Today, the discussion point is a depreciation. First of all, before we go into the details of depreciation, we need to understand where the depreciation has been accounted and how come the depreciation has comes into the picture for as a expenses. Please remember, any asset which you buy has got certain definite life or a useful life, we call it as. For example, you are buying a mobile phone on last year, and the value of the mobile phone may not be same on this year. For example, you would have purchased for 10,000 rupees. Today, it may be a 9,000 rupees. The 1,000 rupees, the reduction in value is called the depreciation. Okay. Suppose if you have purchased the value of, the mobile phone was 10,000 last year. Today the value is 11,000. You don't have a depreciation at all. There is no reduction in value of asset. So before we go detail into that, the basic underlying concept of depreciation to check whether the reduction in value of the asset is there or not. I will give you one more example. You buy a car today, and the value of the car may not be remain same end of the 1 year, right? The value of the car will reduce. The reduction in value of car is called depreciation. You buy a land today, after 2 years the land value may increase or it will be remain same. There is no reduction in value of land. Okay, so there is no depreciation for land. This is the first point, whether the value of asset is decreasing or increasing, that you need to check. If the value of asset is decreasing, you need to charge the depreciation for the asset, right? Number one. Number two is, what is the useful life of the particular asset? You purchase a scooty, or you purchase a plant, equipment, machinery. The life of these particular assets or a mobile phone, whether it is a infinite or finite. If you have purchased the land, you can use this land for any number of years. You don't have to worry about the useful life of the land. Sir, I'm going to use only 5 years. After that, I'm throwing out the land. That is not the case. But in case of a mobile phone, how long you will use? 5 years, 2 years, 3 years. There is a useful life for the particular asset. If the value of asset is decreasing and the useful life is defined, then you have a depreciation. Please remember that. This is the basic underlying principle of depreciation. Most of the people, want to study this accounting terminology. They just jump into accounting terms of depreciation, residual value, how to calculate, and all that. First of all, you need to charge the depreciation or not. How do we know that? First, you need to know whether the value is reducing. Yes, if it is reducing, what is the useful life? 5 years, 10 years. Yes, fine. You can depreciate now. Okay. So any asset has got depreciation, only the reduction in value, that we call it as a residual value. If the residual value is lesser than the actual cost of the asset, you can depreciate. Okay. Residual value or terminal value. Okay. And there is a definite useful life. Okay. Then only you can depreciate. Why the depreciation is only certain percentage? Why not I can depreciate 100% in the first year? The second concept, you buy a plant. The life of the plant is 10 years. You will be using it for 10 years, not for the entire plant you used in the same year itself or 1 year itself. You purchase the plant for 10 years, not for 1 year. If you have purchased the plant for 10 years, how much you have used for the particular year, you can proportionately write as a expenses in the P&L. Okay. For example, you purchase the plant for 1 crore. You cannot write entire 1 crore as a depreciation in the P&L for the first year because the plant is used for 10 years. You are used proportionately for 1 year only to that extent the depreciation amount or the reduction in value of asset has been charged as depreciation in profit and loss account. Okay. If you are charging 100% depreciation in the first year, that is violation of accounting principle. Okay. So how much used, how much useful life? First it defined 10 years. If you have used only for 1 year, take that value for that 1 year only, depreciate in the P&L. Okay. Depreciation is not a cash out. It's non-cash expenses. There is no cash outflow on account of depreciation. The cash outflow on account of purchase of the machinery only. For example, I purchased 1 crore worth of machinery. I paid 1 crore. I am not writing entire 1 crore as a expenses in my profit and loss account. I am writing only 10 lakhs this year if my machinery has got 10 years of useful life. Okay. So what we understood, first one is you need to see whether the value of the asset is decreasing. Second, what is the useful life? Okay. Third one, how much I have used for the particular year. Okay. That much I can charge as a depreciation in my P&L. Now, fourth question will be asked. Somebody asked me, sir, okay, I used only you know, portion of it. I have produced only 5,000 quantities, sir. The another person comes, no, no, sir, I have produced 8,000 quantities, sir. There is another fellow comes, sir, I used only for 500 quantities, sir. That another fellow, sir, capacity is 10,000. I used 12,000 quantities, sir. So, whether is there is any uniformity in this? That fellow for the same machinery charge the depreciation for small value of the quantity produced. The another fellow, no, all this confusion starts. So to bring the uniformity, bring the consistency, Institute of Chartered Accountant of India, that is the accounting, the body for, regulating the accounting standards, define the depreciation percentage for each asset class. Right. There is a definition of each asset class. For the particular asset class, there is a depreciation. For example, plant and machinery, there is a specific percentage. Building, there is a separate percentage. Computer, 40 percentage. There is a definition, right? The definition of depreciation and the rate of depreciation is been given by ICAI or Chartered Accountant Body. Okay, the percentage is not remain same for all the asset because the useful life of each asset varies. Computer you may use it only for 2 years or 3 years. Building which comes for 15 to 20 years. Car you may use for 5 years. Right? The useful life of the each asset varies. So because of that, the rate of depreciation also changes for each asset class. Okay, right. So the next point. Okay, sir. I know the asset is depreciating. I know now the useful life of the asset is there 5 years, 10 years. Then I have checked with ICAI, so taken the rate of depreciation. Now my question is, sir, which methodology I use it? Can I charge it equally every year 15%? Can I charge it? Or, I can reduce the value of the asset and then charge it. So what methodology I can use it? Which are all the useful techniques which is available? That is also defined by ICAI. They were saying there are three methods, right, useful in this depreciation accounting. One is straight line method. The second one is return down value method. Third one is declining or double declining balance method, right? So these are all the three methods, right? There are various methodology which is available for calculating the depreciation, but predominantly the people use return down value method. So in this video I am going to talk about only two methods. One is straight line method, another one is written down value method, which is predominantly used. Straight line method, you are assuming there is no residual value. For example, you purchase a laptop today, useful life is 5 years. If you are selling in end of 5 year, the value of the laptop is zero. Okay. So what will happen? You purchase for 20,000, useful life is 5 years. You divide it by 5, 4,000 rupees is the depreciation. Constant. Every year you charge 4,000 rupees in the P&L account and go off. Right? That is what straight line method. There is no problem at all. Because end of 5 year, that is a definite useful life. End of 5 year, my residual value is zero. Okay. But in case of written down value method, there is a residual value. What is that residual value? The residual value is called terminal value or end of useful life. What is the value of my asset? What is the value of my asset? For example, I purchased the machinery today. After 5 years or after 10 years, my value of the machinery may not be the same as actual cost of the machinery. For example, I purchased today for 10 lakhs rupees. End of 5 years, my machinery value will be 1 lakh or 2 lakhs. I can resell it at a particular price, which may not be same as the cost of machinery, which is much lower than the cost of machinery. If you have a residual value, you can use return down value method. For example, 10 lakhs rupees machinery which you purchase, assuming that 20% rate of depreciation, first year 2 lakhs will be the depreciation amount. How we have arrived 2 lakhs? 20% on 10 lakhs. So 20% on 10 lakhs is what? 2 lakhs rupees. The balance how much? 8 lakhs. Next year, you cannot charge the depreciation 20% on 10 lakhs. You can charge only at 8 lakhs. Alright? Right? 20% on 8 lakhs. So the first year depreciation will be 2 lakhs. Second year depreciation is 1 lakh 60,000. Okay. Is it clear? Right. Straight line method, your quantum of depreciation is remain constant over the period of useful life. But in the case of a return down value method, the depreciation is not remain constant. It keep reducing it. That is the reason it is called declining balance method also. Okay. Suppose you purchase a machinery for 1 crore. Okay. In this example, after 3 years, your value of the machinery is only 60 lakhs. So that 60 lakhs is called return down value. What is return down value? You're down the value of the asset, right? Because the value of the asset decreases because of the wear and tear or obsolescence or passage of time. All right. These are all the three major reasons which the depreciation occurs, right? Please remember, only asset which the value is reducing, you can charge depreciation. The value of the asset is not decreasing, it is increasing like a land. You cannot depreciate. Okay. So the depreciation is a non-cash expenses, very important element in P&L, right? When you are analyzing the P&L for fundamental analysis of investment in the company, you need to see what is the quantum of depreciation charged, whether they are consistently charged the depreciation over the period of time. If there is any methodology changes occur on the last year, what is the level of disclosure which they are given? These are all the important point. One should go through the P&L, understand before taking any decisions whether the profit arrived by the company is correctly arrived or is right. Okay. I hope this video is useful to all of you, right? And those who are not subscribed our channel, please subscribe it. Thank you so much. Wish you all the best for the day. So we'll catch you up on tomorrow. Thank you.